Vision. Please join us here. Heads of division at ISSER, please, your seats have been reserved for you up here. Kindly join us. I warmly welcome you to the launch of the State of the Ghanaian Economy Report 2022 and the review of the 2023 Quarter 3 economic performance. I'm going to hand over now to the MC for the day in the person of Mr. Kojo Yangsen of Joy FM. Please let's welcome him with a hand of applause.
Thank you, Vincentia, and good morning to you all. It's a pleasure to be here with you for this all-important event. For the 32nd time in history, ISSER is releasing this economic performance review. And this has now become a staple piece of literature for anybody who wants to plan. To plan, you need information. And all sectors of the economy require planning, whether it's the private sector, whether it's the public sector, whether it's the media, even the clergy need to know how the system will go so that when they are doing their harvest, they know how much to charge. And documents like this make it possible for everybody to plan. That's why it is so important that we are able to come together 32 times in a row to release this document. As always, we're going to start with a prayer. So if I can invite to lead us through an opening prayer, Dr. Nana Ama Asante-Poku, Research Fellow.
Good morning. Shall we pray? Our Heavenly Father, we are grateful for the opportunity to be alive and well. We thank you for the opportunity to be gathered here today. We ask that you come and be with us as we go through this program. And at the end of it, whatever we do here will glorify your name. Amen.
Thank you very much, Dr. Asante-Poku. A round of applause for her. All right, this is how today's program will go. First of all, we'll get somebody properly qualified to explain to us why we are all here. Then, somebody will introduce our very august chairman. We'll get some opening remarks from the chairman, and then we'll get to the meat of the event, which is an overview of the State of the Ghanaian Economy Report for 2022, which includes a review of Quarter 3 of 2023 and our economic performance for these periods. This will be given to us by, of course, the director of ISSER. Then we'll go through a very important Q&A session where we'll get the opportunity to address all the issues that might come to mind once we've heard the overview of the report. Then we will officially launch this all-important document, after which we'll do something rather special for the first time. We'll see if we can't auction off the first 5 copies of the report. This report is so important, it's so heavily depended on by so many people that I have no doubt we'll be raising some record-breaking numbers today with our auction. Then, of course, we'll wrap things up with some closing remarks from the chairman, and then we will have our vote of thanks, take some pictures together, and then that will be it. So, very straightforward program, and we'll get it rolling immediately with an explanation of the reason why we are here. For that, let us welcome Senior Research Fellow, Dr. Ama Feni.
Thank you very much. And welcome everyone to ISSER, University of Ghana. I'd like to say that it's an honor to be the one introducing you to this launch. 32 years 32 copies, and we are still here. The State of the Ghanaian Economy Report is a comprehensive and respected report that analyzes the performance of various sectors of the Ghanaian economy. This year marks the 32nd edition of this report, making it a milestone in ISSER's dedication to providing valuable, objective, and evidence-led insights to support Ghana's development. As in previous years, today's launch provides a timely and objective platform for discussing pressing issues about current economic situations, the IMF program, and its impact on the lives of Ghanaians. It reflects the Institute's commitment to fostering evidence-led discussions and promoting knowledge for decision-making and also development. Today's launch forms part of a variety of public engagement events that have been organized by ISSER over the years and throughout each year. These events include post-budget statement reviews, roadshows that are conducted across the different regions in Ghana, and the launch of our other institutional publications, such as the Ghana Social Development Outlook, a biannual institutional publication that comes off every 2 years. I'm also here to introduce our chairperson, our chairman for today's event. He is Dr. James Asare-J. He's the 19th president of the Association of Ghana Industries, AGI, and also the founder and chief executive officer of Assad Tech Group Limited. This company is a major kitchenware and roofing product manufacturing factory, and also a real estate company that is located in Tema, Ghana. Dr. James Asare-J has served on the Commonwealth Enterprise and Investment Council in UK, and is also a member of the advisory boards of the Ministry of Education and the Commission for Technical and Vocational Education and Training, CETVET. He's also a former advisory member of the Ministry of Energy, Ghana Infrastructure Investment Fund, and also our own institute, ISSER. He was also a former board chairman of the Hope Children Village, an orphanage. He has represented industry on a number of forums, including the National Economic Forum Implementation Group, the Senchi Consensus. He has a strong, long-standing academic experience in productivity and performance of manufacturing SMEs. He holds a Doctor of Business Administration and a Master's of Applied Business Research degrees from the Swiss Business School in Switzerland, an MBA from Birmingham City University, UK, a postgraduate diploma in marketing, UK, and also a BSc Engineering from Kwame Nkrumah University of Science and Technology, Kumasi. We are really honored to have you here, Dr. James Asare-J. Thank you for taking this place.
Thank you, Madam, for that elaborate introduction. Provost, Director, I think I'm honored to be part of this program. And let me say that several years ago, as I indicated to you, I was on the advisory board of ISSER, and I'm sure the board is firmly in place now. Let me indicate that it's always good to have an independent institution, of course, academic institution like this, to present the true situation as we have in our economy. Because what we see is that the politicians and sometimes the business people cloud the environment with a lot of things that become so difficult to know the real situation. So I consider this event, and of course, the previous one that had been done as something very good for the economy, so that we can really be able to look at what has happened before, and then more importantly, how do we look forward? We all know the current situation of the economy. even though it's not only limited to Ghana, I mean, globally, we have challenges. And giant countries or economies are really reeling under huge difficulties, particularly those of us who come from industry, how businesses are crumbling. But the question is, how are we able to get the actual facts that will help not only the managers of the economy, but also industry players who are supposed, as we are always told, to be the engine of growth. I wonder if we are still the engine of growth, because there are so many things happening that it looks like we as engine of growth or the private sector, we have very little say. But I believe that as we go through the overview and as we go through the presentation, we would be able, and more importantly, also get other players outside the academic sphere to also be part of such exercises. With it, few words, I think I accept to be the chairman of the occasion. I think as we go along and in my closing remarks, there will be a lot more things that I would want us to share. Thank you very much.
Thank you very much, and let's keep that applause going for our chairman, Dr. Asare Ajay. Okay, so we've got a lot to get through, and the chairman has got us all thinking already. Indeed, is the private sector still the engine of growth? I have no doubt that it is, just that maybe it has blown a gasket or two. But if indeed the private sector is the engine of growth, then this report is the engine oil that the engine absolutely needs in order to keep running effectively. And so to hear the overview of the state of the Ghanaian economy report, we're going to have the director do that for us. But just before, I thought I'll take the opportunity to introduce a few of the people who are seated at our high table. So, of course, we've already met our chair, Dr. James Asare Ajay. Also on the high table is the director of ISSER, Professor Peter Korte. Let's give him a round of applause. The provost of the College of Humanities is here with us, Professor Daniel Ofori. Then we have the heads of divisions at ISSER. Professor Isaac Osei-Akoto is the head of the Economics Division. Dr. Martha Awo is the head of the Social Division. And the head of statistics is here, head of statistics and survey division, Professor Charles Aka. All right, let's get this overview. To do that, let's welcome with a loud round of applause the director of ISSER, Professor Peter Korte.
Thank you very much, Mr. Moderator, Mr. Kojo Jansen, the Provost of the College of Humanities, our Chairperson, Dr. Asare Ajay, members, distinguished members of the High Table, the heads of divisions, colleagues, faculty from the University of Ghana, and all dignitaries here present. All protocol duly observed, as is being said. Good morning to you once again. Are you angry or something? Or because it rained? Or you are not from Presec, so you are angry? Good morning. Yes. I will present an overview of the report. I do this on behalf of the team that prepared this report. We have been doing this for the past 32 years, and indeed, it's not easy to come out with a report. The data, putting the data together, the analysis, going through the review process, editing and typesetting, it's really a lot of work. But thankfully, we are here today. Yeah, so as I mentioned, the team comprises of my good self, Professor Isaac Osakoto, Head of Economic Division, Professor Augustine Fosu. If you are here, just wave when I mention your name so you'll be acknowledged. Yes, Professor Fosu is over there. Professor Charles Aka is right behind me. Dr. Amafeni, who did the welcome. Dr. Fred Janku, I don't think I've seen him here. Andrea J. Holmes, right behind the camera. We have Dr. Richmond Atta Ankoma. Yes, short but powerful. Very powerful man indeed. Dr. Ralph Ama. Yes, Ralph is here. Dr. Nanama Santipoku. Dr. Gloria Afomensa, Associate from Economics Department. We have Professor Festus Ebotexing, yes, right behind us. Dr. Daniel Osafo, also here wrote chapter 8. With me, then Professor Robert Dakun Osei, who caused the rain this morning. Yes, great. I don't know, I hope I haven't left anybody out. And of course, the administrative staff, the accounting staff, everybody that supported this process, editing, our editor, and many, many other people who have worked tirelessly behind the scenes to get this report ready. The State of Ghanaian Economy Report 2022 and Q3 Economic Performance. As I mentioned, this is the 32nd edition. So far, we normally get provisional figures by 2022. So it is only when the media report is read, it depends on when it's read before you can get figures for 2022. So that is one of the reasons why our report is usually a bit late, because we don't have real-time data, fiscal data especially, for us to complete the report. But the good thing is that we are able to garnish time series data for several years. We don't have a data repository, very few or virtually non-existent data repository. But with this report, people are able to put them together and able to have time series data, which helps our students, helps researchers, and help policymakers make informed decisions. We have heard even Parliament sometimes cite State of Ghanaian Economy Report. We've heard policymakers and many others use the report. We believe this report, at this time, would inform the 2024 stakeholder budget consultations, because we are going to make some projections and some suggestions as well. We provide independent analysis, as the chairperson said, independent analysis, non-partisan, from a very non-partisan lens. And our Q3 data, although limited, are still informative, because we see some of the monetary figures, some of the fiscal figures actually being updated. So we are able to engage meaningfully with data. With the case of Sub-Saharan Africa, to 3.3% in 2023, and then 4% in 2024. And for inflation globally, inflation is coming down, or expected to come down, reduced from 8.7 in 2022 to 6.9 in 2024, and then 5.8 in 2023, and then 5.8 in 2024. Trade volumes declined from 5.1% to 0.9% in 2023. So all of this has repercussions on our economy. We've seen many people fall in poverty, with 75 million to 95 million people fall affected by poverty because of the Russia-Ukraine war and worsening climate change and many other global happenings. I think I've spoken about slower growth. Higher interest rates and depreciation currencies are some of the challenges of our developing world, some of the difficulties low-income countries face. Of course, supply chain disruptions during the pandemic is improving. Delivery times are back to pre-pandemic levels now. Global GDP is expected to expand, as I mentioned earlier. So there are some positive signals that are likely to occur. Now, in terms of our domestic front, our growth, our GDP grew by 3.1% in 2022, a decrease from the 5.1 we recorded in 2021. Again, if we look at the sectorial growth, non-oil sector grew by 3.8, with the oil sector contracting by 6.7%. Indeed, the country's growth rate was lower than was registered in the Sub-Saharan African region. Considerable declines occurred across the sub-region. The evidence, as adduced by the IMF, is that we're going to grow by only 1.6%, but the recent assessment of our economy, they realized they made a mistake with their projections and they've started revising their projections upwards. In terms of the sectors, we've seen a growth rate of 5.5% in 2.2. The services sector remained the highest contributor as usual. We've seen decline in a growth in agriculture, but the growth rate, of course, was lower, 4.2% compared to 8.5% rate recorded in 2021. Industry recorded a slight expansion compared to the contraction of 0.5 recorded in the previous year. Agriculture, as I mentioned, grew by 4.2% in 2022, much lower than the 8.5% that we recorded in the preceding year. Industry is picking up. The services sector recorded the highest growth, as I did mention, although still lower than what was recorded in the preceding year. Then on the fiscal front, you would see that with a target target growth of 7.4%, deficit revised to 6.6. The actual deficit was 10.7% on the cash basis. The data shows that we've been unsuccessful in ensuring fiscal consolidation. We have recorded a worsening fiscal position relative to 2021, and we ought to take caution. Otherwise, with 2024 elections right at the corner, we may have challenges to deal with. This deficit was financed from domestic sources, 85.3%, quite significant. I must say very high, equivalent to 5.6% of GDP. And we know the repercussions when you are financing your deficit through domestic borrowing. You are crowding out the private sector, and that has its own challenges, as we've seen. Revenue outturn for 2022, I think it's picked up slightly. We've seen revenue GDP of 15.8% compared to a target of 20%, and the revised target for the mid-year of 15.9%. Revenue target was lower than the budgeted, but we've seen some robust improvement in international trade taxes due to the reduction in the benchmark values, some of the exemptions that were taken off, the depreciation, the revision of reference values and freight charges. All of this led to some improvement in trade taxes or revenue from trade taxes. Of course, we've also seen significant growth in revenue due to the growth in oil and gas receipts due to crude oil price hikes following the commencement of the Russia-Ukraine war. Total expenditure, when it comes to expenditure, we are quite good at it. Our expenditure GDP ratio is about 27.1%. Year-on-year growth of 33.9% was recorded, was above the revised target of by 3.8%. Expenditure performance was poor, as well as expenditure items were all above the mid-year targets. The growth rate you will see highlighted in red. We've seen grants to other units, use of goods and services increasing by 75.3%, capital expenditure 42%, interest payment 36.3%, and compensation increasing by 24.9%. So all of this tells us that the expenditure rationalization or reduction has not achieved the target. We were told there was going to be a 30% reduction, cuts as announced. That did not yield the intended results as we were expecting. The debt figures still remain high, as at end 2022 was 70.7% of GDP. Domestic debt accounted for 44.7%, and then external 55.3%. It's interesting, Mr. Chairman, to note that we have a very high debt service ratio. Of every cedi in revenue that we raised in 2022, 56 pesos was spent to service debt in 2022. High by all standards, and that's one of the challenges we faced in the year under review. Then, the year also was characterized, when you look at the monetary sector, we saw that the year's macroeconomic imbalances also had some effects on the monetary and financial sector. And there was certainly the need for a strategic move by the monetary authorities. We saw M2 grow appreciably by 33% compared to 13% in 2021. This was mainly driven by net domestic assets. So based on that, the monetary policy rates were revised to accommodate the increase in money supply, 14.5% in January to 27% in December. There were 7 MPC meetings, which resulted in 4 upward adjustments in the policy rate. And there was even an additional meeting as well to look at the inflation rate. There was persistent, in terms of inflation, we've seen persistent rise in inflation, the highest rate over 2 decades, 13.9% in January 2022, and by December, inflation was 54.1%. Cumulatively, the influence of food inflation appeared more intense, as we can see. It was largely driven within 4 food subgroups: water, milk, and other dairy products, eggs, sugars, confectionaries, and many others, caused this inflation. So inflation, as you see in the graph, has been quite dramatic, but then food inflation has been one of the major areas where the turbulence did occur. This, of course, has repercussions on the foreign exchange market. We've seen the cedi under intense pressure anytime there is macro imbalance. Of course, one could mention our usual Russia, Ukraine, and all, but I will add our own internal inefficiencies. All of that caused the depreciation in the cedi. The worst performance was the dollar and the euro, where depreciation of 51% and 44% in 2022, compared to 4.2% and even an appreciation of 3.2% in 2021. The quarterly analysis indicates that it was in the 3rd quarter that we had the most turbulent depreciation. Month-on-month analysis showed that the cedi's worst performance occurred in October, and you can see in the graph how the spikes in the inflation, in the exchange rate. With interest rates, Mr. Chairman, this is quite interesting to see that the area was also quite unstable, partly attributed to the high rate of inflation. Of course, if your inflation is high and you are investing, I need to get more above the inflation rate so that I can get a positive real return on my investment. We looked at WDI, that is the World Development Indicators for 2022 for 16 sub-Saharan African countries. And it will interest you to note that Ghana's lending rate of 35.6% was the third highest, following Zimbabwe, which was 131.8%, and Madagascar, which was 48.83%. I need not tell you about these two countries. So if we are comparing ourselves with Zimbabwe and Madagascar, where at a point they couldn't even get money to buy paper to write their national examinations, it tells you that we are not doing well. We were not doing well in 2022. We had serious challenges. Domestic credit improved. It increased by 30%. And why? We know why. It was the highest in a decade. Why? It was lessons from the domestic debt exchange program. People were not comfortable investing in the usual suspect, buying government bonds and all the other things in order to avoid a haircut. You hold, banks were now willing to lend to the real sector. What they should be doing, they've learned their bitter lessons and now they are lending to the real sector. So we saw an increase in domestic credit to the private sector. The structure of the allocation, however, showed that it was skewed towards the services sector rather than to manufacturing. We also saw cocoa financing and the others receive very low patronage. Financial deepening, we looked at some of the figures and saw that growth in liquid money in the economy, we saw growth in liquid money in the economy, and people chose to hold more money, more currency, than putting their monies in the banks. It was not surprising, given the high rates of inflation. If inflation is 54%, and you buy treasury bills and you are giving 20%, it means you are earning negative real return. It doesn't pay. That is why we see a lot of houses springing up around East Legon and other places. I would rather invest in real estate than put my money in the bank to earn negative real return. Rural community banks, we saw growth happening. Ghana's stock exchange is also picking up slowly, or picked up slowly in 2022. We recorded a trade surplus from 1.7 billion in 2021 to 2.8 billion in 2022. Our balance of payment, again, recorded a deficit as usual. Our gross international reserves could cover 2.9 months of import relative to 4.3 months of import cover recorded by end 2021. So it tells you that, yes, indeed, 2022 was a challenging year. Our reserve situation was deteriorating as well. Merchandise exports, the figures tell you we depend so much on few primary commodities, mainly gold and cocoa. And that makes us very vulnerable to external shocks. So the suggestion is that we need to, the dependence on primary commodities, we need to break away from that, develop the value chain, and also process some of these commodities. Increasing productivity is key, and then commit some resources from the fiscal consolidation to improve the business environment to attract more investors. In terms of sectorial performance, we've seen agric sector being quite resilient, although the growth recorded was slightly lower than what occurred in 2021. Nevertheless, agric remains quite resilient. Production of some selected commodities shows that we are producing more of cocoyam, cassava, yam than we are doing with maize and the staples. There's also a decline in fertilizer imports over the years from 2016 to 2021, where we could find data, realize there's been a decline in fertilizer imports, and that has repercussions on food security. Cocoa production also moves in tandem with producer prices. In the years from 2016 to 2017, when producer prices were low, production was also quite low. Farmers were smuggling to Cote d'Ivoire and other places. But as soon as the prices improved, we've seen a turnaround. So it is important we pay the right prices to farmers. But we also faced with a challenge. Cocoa lands are now competing with illegal mining. That is a fact that ought to be addressed. It will get to a point farmers will feel more attracted to investing or giving their lands to Chinese, to other people, to mine rather than producing cocoa. These days, some are even moving into tree crops, other tree crops aside cocoa. So that ought to be addressed carefully. I hear Mr. Yangson and his team on a daily basis lament about this illegal mining menace, which is affecting our health, the food we eat, and the water we drink, many other problems. Now, planting for food and jobs, we have PFJ 2.0. We moved from 1.0 to 2.0. I was privileged to be part of the launch of the Youth in Agriculture. Brilliant policies. My only hope is that these policies will be implemented properly. It's well cut out nicely, and I believe that should be the way to go. So hopefully, if we're able to do this properly, then we'll be able to stimulate agriculture. Well, the idea is that government has acquired about 200, some huge tract of land in various regions. So 2 young people, that's for the youth in agriculture, 2 young people can come together, apply, they'll be given seedlings, they'll be given fertilizers, land, everything to cultivate. They don't pay anything. Then when they harvest, about 1/3 of the produce will be taken over by government to defray the cost. And I think that is something, if it's well implemented, we'll gain more agricultural output. So with the industrial sector, I think I gave a gist of what is happening there. There was a slowdown in 2021, but a marginal pickup in 2022 at 0.9%. Then but we've also seen issues of high taxes and general cost of doing business. I'm sure Mr. Sareje will tell you the challenges they face within the sector. So industry continues to strive despite all the challenges. Manufacturing recorded some slowdowns, and we've seen some products, groups within the manufacturing sector complaining of high rates of, or recording very high rates of inflation, industrial sector inflation averaging 58.2%, which tells you that the cost of doing business within the sector is very high, and we need to consolidate the macro stability and ensure that they are able to obtain inputs and other raw materials at affordable prices so they could continue to be in business. Our services sector remains robust. Its share is about 44.9% compared to 48.9% in 2021. It's recorded significant growth rates as well. The general slowdown in the growth of all subsectors, except finance and insurance, education and health, and social work. We know why finance is slowed down. We know what's happening with insurance because of the financial sector issues. But ICT remains the best performing subsector. Education growth is the highest since 2015. There are a few other things happening within the services sector. Right from 2019, the year of return, beyond the return, we've attracted quite a number of tourists who, on average, spend over $2,700. We now have a state-of-the-art Kwame Nkrumah Museum, which was reopened. So tourism remains vibrant. But I must say, we need to keep our cities clean. Quite recently, we had an international conference at Movenpick where we hosted over 200 delegates. And there was a tour that was organized. They went to the city center for about 2 hours. Unfortunately for me, during the closing dinner, I sat beside a South African, and she was very disgusted that, is that the best you could show? They went to our beaches, Jamestown, and they said after 1 hour, all the delegates wanted to return. I was trying to explain, but it was difficult to, save our image. I think we need to do a bit more than we are doing currently. The stench and all the things that we find in our city center doesn't augur well for tourism. But we have great tourist sites which we should take advantage of. Education, free SHS continues to be vibrant, except to say that with over 1.3 million students enrolled, the infrastructure available is not sufficient to accommodate all of them. So we need to work on that. We are told there are measures there's some discussion to progressively remove the boarding fees. I have always proposed this idea that it shouldn't be free for everybody, and there are community day schools. So why don't we encourage people to use them rather than somebody posted from Volta region to Upper East region? I think we need to do something about this. Free education is good, and I strongly support free SHS, except that I think implementation-wise, there are a few challenges that we ought to work on. So quite a number of things happening within the services sector. The Girl in ICT program, government has signed an MOU to also regulate the mass migration of skilled health workers. Migration remains another major challenge. Recently, I was in the UK. After church, I engaged a couple of students, Ghanaian students, and I termed them the no return bunch, the bunch of no return. None of them wanted to come back to Ghana. None of them. In fact, they thought I was crazy advising them to come to Ghana. None, virtually none of them. And it's something we seriously have to work on. So we have a special chapter this year, the 8th and the last chapter, which is electronic transfer, case of Ghana. We looked at a few examples across the sub-region and drew lessons from that. So realize electronic transfers are one of the surest means of raising revenue. But then it can be very burdensome if you don't strike a good balance. You don't set the rate properly. We look at Uganda, Republic of Congo, Tanzania, Cote d'Ivoire, and in all of them, there was public resistance. In all of them, there were challenges. In all of them, they did not yield the intended outcome or revenue. And same with Ghana, our e-levy rate was initially pegged at 1.75, then to 1.5, and then later to 1.0 when the daily threshold was scrapped in January 2023. Also had its own challenges. We've seen the blips in the number of active mobile money subscribers and agents. We also saw a decline in the volume of transactions as well. And there was changes, actually. Immediately it was announced, people resorted to alternative payment systems when the e-levy was implemented. Issuing of checks and other payment systems started picking up as a result of the introduction of the e-levy. So the key messages from the e-levy chapter is that in all the countries examined, the taxes fail to provide the anticipated revenue. The tax rate is very crucial. Marginal reductions, if we continue to propose that anything around 0.5% will make it more affordable, and many will make a lot of difference, and stakeholders will not reject the levy as has been the case in the past. Ghana's e-levy, less than 7% of target revenue was realized initially, and then later it's picked up There were growth in alternative payment system, drop in active Momo accounts. After it was revised to 1%, there was then a reversal, drop in alternative payment systems usage. However, the figures shot up again. So we've seen that the current rate is not the optimal rate. 1.5% is still high. People still find ways of getting around the system. The cash-out system still remains an alternative for avoiding e-levy. So, ladies and gentlemen, I'll quickly then move on to the Q3 performance. I think we've set the basis for this already. We've seen that our first 2 quarters that we have grown by about 3.3% in Q1 and 3.2% in Q2. However, non-oil growth reduced by 1.2% between Q1 and Q2. We've also seen some sectorial growth rates occurring. Agriculture sector accounts for an average of 20% in the first half of the growth. Share of services reduced from 47 to 33% in Q2. We've been able to, so far, challenge the IMF projection that we're going to grow by 1.6% because both Q1 and Q2, the growth rates recorded were above 3%. And usually, we tend to grow higher or faster in the last 2 quarters. So granted that nothing untoward happens, then we are likely to record an average growth of 3% or more in 2023. That is granted that nothing really untoward happens. Again, on our fiscal situation, we've seen revenue and grants projection of about 18% of GDP, an increase of 46.8% in an austere environment, in an environment where we are having crisis or difficulty. We're still very confident that we want to increase revenue by 46.8%. We're also very confident that we want to increase our expenditure by 39.5%. It's interesting. So this is what we see. If you take interest on domestic revenue, compensation, statutory payment, realize there is virtually nothing left for capital expenditure. Every part of our revenue is gone. That's the kind of economy we are facing, and we ought to work seriously at it. That is why government introduced some of these supportive fiscal policy measures, the introduction of the new taxes, the increase in the standard VAT for 12.5 to 15%, the registration, reintroduction of road tolls on selected roads, and many, many others, policies that were introduced. Again, we've seen that it's possible we might achieve fiscal consolidation based on first half data we are seeing. However, public debt as of June was 71.8% of GDP, still very high. We are seeing some mixed rating from on Ghana from the rating agencies because of the debt restructuring exercise. The risks and vulnerabilities still remain as a result of global happenings. At the moment, there's a lot of uncertainty as to what concessions the external creditors are going to give. We are told that Eurobond holders will suffer 30 to 40% haircut on their principal. You know, all of this creates uncertainty, which affects our ratings and it also significantly reduces confidence, investor confidence in our economy. So far, slower pace in expenditure execution and revenue shortfall is recorded. Our revenue shortfall of 8.4% below target, a fiscal deficit of 7.7% of GDP, with provisional outturn of 1.3% of GDP recorded. We did a quick calculation or a quick check on some of the taxes that were introduced, how they were performing, because it's normally good to assess some of these tax measures to see whether really they are making any impact. If you look at personal income tax, with the new reform, there's a growth and in the number of about 70 3% growth. Then we also seen positive deviation. It means we have been achieving beyond the target. Then the National Fiscal Stabilization Levy, we've also seen significant growth, but again, falls short of the target. VAT, about 96% growth in revenue and about 5.3% above the target. E-levy, we've seen over 300% growth, but still below the target by about 50-something%. So some of these figures are important for us to know whether to scrap some of the taxes that we may term as nuisance taxes, and therefore they are not yielding revenue and ought to be scrapped. Import duty increased by 45%, but again, is below, yielding revenue below the target of about 8.7%. So we can also look at sanitation levy, a growth of 0.1% and below target of about 12%. Again, all of this informs policy making as to whether we should scrap. Now, if you look at the import sheet, there are several taxes that so many taxes that you pay. Perhaps you could scrap some of them and free the importer, and that can translate into production. On the fiscal front, again, we've seen that there's limited up-to-date data for us to meaningfully engage with policymakers. I took a quick look at the mid-year budget statement. Paragraph 326 says we're going to use the GIFMIS system to ensure that there's no off-budget spending, and we are going to integrate all finance systems in a holistic financial reporting system, and all the fine languages, you find it there. But go and look for fiscal data. Apart from the mid-year figures that we saw, there's no fiscal data for us. So I keep asking myself, we are engaging stakeholders to inform government on the 2024 budget. What data are we using? What information do we have to be able to meaningfully engage to draw up this budget? I think we should move beyond this and get some real-time data, up-to-date data on our website, open source data. These are not private information. This is information for all of us. So we can be able to, as researchers, we can be able to advise government. As stakeholders, we can also engage government. So that is one thing that I thought we should all push for. Our expenditure growth rates in austere times also amazes me. If you look at 2018, it grew by 11.9, 2019, 16.9, 2020, 42% during COVID, during the COVID era. 2021, 11.96, 2022, 26%. 2023, if you look at the projected expenditure, our expenditure is going to grow by 34.2%. This is an economy which is struggling to raise revenue, struggling and borrowing, asking for debt relief. Yet, we are not comfortable touching expenditure. We are still increasing expenditure. I think we ought to look at expenditure again. It's not all about raising revenue, taxing production. We also have to look at our expenditure and trim down the expenditure, help value for money spending. Mr. Chairman, we took a quick look at this data from the Food and Beverage Association. They did a survey, and I called the president and asked the credibility of the data before I could present it here. So this is what we have there. I think Joy FM also highlighted this in their Super Morning Show. I think you won an award, right? Yeah, good. Yeah, so we highlighted this. You can see the tax element. In some of them, over 100% tax on evaporated milk, spaghetti, juice, tinned tomatoes. Look at the price before tax and the price after tax. See, these are the things that fuels inflation. If you're paying so much tax on these food items, no wonder food inflation continues to increase. No wonder industry continues to complain. So we need to look at some of these things carefully. You don't always have to increase taxes. Sometimes if you broaden the base or you even reduce, you maintain certain tax rates, more people pay, businesses produce more, they pay more in taxes, and you're able to make or meet your revenue target. So I think we need to engage government on some of these issues. On the monetary front, in terms of Q3, we've seen inflation decline over time. So we've seen July, August, September figures for food and non-food inflation. But I must say that's still high. Inflation is still high, despite the decline to over 37% thereabouts. Depreciation of the CD still remains a challenge compared to the previous years. We've seen some of the figures for CD dollar. In September, we saw some sharp depreciation compared to August and July as well. Interest rates remains high, but of interest to me is the real interest rate. If you look at the table on your right, you see real interest rates in August 2021 and August 2022. In August 2023, for the 91-day, it is minus 13.8%. So if you bought treasury bills, you are earning negative return, minus 13.8%. 182-day, minus 12.3%. 1 year, minus 9.2%. As for savings, ordinary savings account, it's like you have dashed your money. You are just every month giving the bank money to take, minus 35.1%. So all of this points to the need to ensure macro stability. Otherwise, the real value of our currency would continue to fall. Last but not the least, I just want to quickly touch on the IMF program. We received a staff agreement on economic policies and reforms. Our first review was concluded, and we were told we performed quite well by the triggers or the targets that were set. So we will receive 600 million in financing once the review is approved by the IMF management and formally completed by the IMF executive board. But we have to ensure that official creditors quickly reach an agreement on the debt treatment in line with the financial assurances they provided in May 2023. The question is when? As we speak, we don't know. So we are in suspense. We are on a lifeline waiting for external creditors to agree before we get the much-awaited $600 million to shore up our reserves and then stabilize our exchange rate. So all of you who know how to pray, pray so we get this happening. But of concern to me is the Eurobond holders who we are told will suffer a haircut of 30 to 40%. You see, when they talk about Eurobond, you think it's external people who are, or external investors. There are local firms and banks who have bought Eurobonds. Imagine that you have $100 with government, and government says, I am taking 40 and giving you $60. I am sure you would go blank immediately. So that is what they are going to suffer. My concern is this will really hurt confidence in the economy. I believe those investors will think twice if they have to invest in our economy. So let's be careful the way we manage our finances. Otherwise, we will be caught in this web. We have to take this painful pill of debt exchange, which will have repercussions on generations yet unborn. So I think we ought to work to bring confidence back as quickly as possible. My recent trip to, not too long ago, to Zambia, I tried to interrogate and find out how they're also engaging with the IMF. I don't hear about debt exchange. I don't hear about some of the things So I keep wondering whether maybe they had better indicators. But I saw that their debt to GDP ratio was 100 and something percent. So we are in the same bracket. I don't want to hazard a guess, but it looks like they are getting a better deal than us, because the external creditors agreed that those who hold their domestic bonds should be exempted from haircut, but we give them haircut. So investors are investing. In fact, Zambia is not the darling boy, the darling country of investors. They are now investing more money. So their exchange rate becoming stable. They seem to be enjoying some comfort being under the IMF program. I think we ought to look at the way we negotiate some of these terms carefully. It is taking too long to get this assurance from the external creditors. Such an uncertainty can certainly hurt investors. So, Mr. Chairman, I think I've spoken for quite a long time now. Let me try to draw some conclusions. One, the economy has shown signs of recovery and is likely to grow by about 3% by end 2023, all things being equal, as every economist will say. The agricultural sector remains resilient with PFG 2.0 to revitalize the sector. We have great policies in the Youth and Agriculture Program, and I'm hopeful that the implementation will be good. We'll walk the talk. Although revenue has grown 15.8% of GDP, expenditure growth is also a source of worry. If you look at the projected figure and compute the growth rate of 34.29%, we lack prudent spending, and that ought to be addressed. Our revenue versus expenditure shows a gap of about 6.4% of GDP, and that works to roughly 5.5 billion cedis. That is the gap between revenue and expenditure. We need to plug that hole. We cannot borrow from external sources. We can only borrow domestically. Now, Bank of Ghana cannot lend. So where do we find this money? Unless we trim expenditure carefully. Taxing production, if we are taxing production excessively, this is going to affect industry. It's going to promote imports because our local producers will stop producing. They will be out of business, and that can worsen the already high unemployment situation. High taxes on food and beverages is fueling inflation, as I showed, and we need to review some of this very critically. The lessons we've learned from the domestic debt exchange program should inform our spending in 2024. Very important. Every election year we spend, and then we use the next 2 to 3 years to clean up. So we have what we call the political business cycle, or the elections business cycle. As we strive, as government strives to break the 8, they should strive to break the political business cycle so that we will have a decent economy to run. The 30 to 40% haircut on Eurobonds, as I mentioned, will drive confidence. So, Mr. Chairman, based on that, we recommend prudent spending, reduction in some taxes, elimination of some of them, especially taxes on production. We should take a second look and rather broaden the tax base. Government should also invest to stimulate the productive sectors, the roads and all the other infrastructure. That will stimulate production. And if we have to borrow at all, let's borrow responsibly. On that note, I thank you very much.
Professor Peter Quartey, everybody. And that comprehensive overview absolutely makes me want to read this report and start putting flesh to some of the very interesting details that Prof has shared. You know, I've realized something, and it makes me very glad that I came here, Mr. Chairman and Prof. I've realized that, much as I was explaining earlier, that documents like this, reports like this, are very important for planning. I've realized that they are also even more important for the work we do in informing the public. Because so many of the conversations that we have been having on radio, on TV, about what's happening in our country, so many of them have been explained in this document. Why we are not able to substitute imports, no matter how hard we try, no matter who we vote for, we still can't seem to substitute our imports. Because for some reason, our manufacturing sector is just not attractive to investors, to lenders. And this report explains why. It explains why farmers are giving away cocoa lands for galamsey, because, well, cocoa is just not what it used to be. It explains why some ministers, in spite of having numerous bank accounts, are keeping large amounts of money under their pillows and in their houses. Because, I mean, who wants to earn negative returns, right? It even explains why when their house helps rob them, they use the money to invest in real estate. Nobody wants a haircut. It explains why government has declared, I think it's now 3 consecutive years of roads and have constructed hardly any roads. Because if you are spending 56% of your revenue on servicing your debt, not eliminating your debts, servicing them, more than half of your income goes to service your debts, how will you build or buy anything? And of course, it explains why the e-levy was doomed to fail from the very beginning, because it has not succeeded anywhere else. So I want to say a big thank you to ISSER for doing this work. It has answered a lot of questions for us, and I know when the chairman gives his final comments, it will really bring into sharp relief what we have learned from this document. We're going to spend a few minutes asking questions and getting answers. So if any of what you have heard has raised questions for you, if there's anything you are curious to know, well, ISSER is here, very heavily represented and ready to answer your questions. So we have a microphone that will go around. If you raise your hand, if you have a question, you raise your hand, a microphone will come to you. We'll take the questions in groups of 5 and then see how many of them we can answer in a 30-minute period before we hear from the chairman. So, if you have any questions, contributions, comments, please, if you can show by hand, we will come to you. Right, we have a gentleman in a brown cardigan in the back, yeah. So, give us your name, okay, then ask your question.
Good morning. My name is Winston Taki, Metro TV. We have had a growth target reviewed, and it's as if every time government is rather trying its possible best to meet the IMF projected growth target, instead of working on our core growth projectors such as commodities, diversifying our economy. And it's as if we can never please the IMF. Instead of taking care of our economy and building a structure that is conducive to our growth. And every year, we keep seeing the same projection. We keep seeing the IMF report giving us and dictating how we should go. For how long are we going? We have consistent report, objective report from ISSER consistently, but yet still, when you go to the House of Parliament, the argument and debate that goes on there is totally different and non-factual, most of them sensational, but not based on the figures that tells the objective of where we're going as a nation. So the key question I want to ask is, where are we headed towards? Where are we going?
Thank you, Winston. Please show by hand, and then we'll bring the microphone to you. I see the gentleman in the yellow kaftan. Yeah. Your name and then your question, please.
Thank you very much. My name is Kofi Asante. So the onerous toll of the debt servicing has been highlighted. And if you look at the scale of it, we are not going to be able to pay back our debt. In fact, finish servicing the interest, not to talk about paying back the debt. Part of the reason is the governance issues we have in this country, political business cycle, which has been highlighted. But there is a growing call internationally to fix the structural constraints which seriously affect developing countries. And there's now a call for a global debt jubilee. You realize Ghana is not the only country, Zambia, as Prof. Kotti has mentioned, Sri Lanka, other countries. So there's a call for the jubilee, but then going forward, there's also a call for restructuring of the international financial system. For instance, Germany pays about 1 or 2% interest, and Ghana, our interest rate is probably about 10%, more than 10% actually, because of the way we are rated. So I want to know the thoughts of the authors on this. Thank you.
If you show by hand, we'll bring you the microphone. We want to take 5 questions, and then we'll get answers to those and come back for another batch. So if you want to show by hand, if you've got a question, contribution, comment, we'll come to you. Right, I'm not seeing any hands up. Oh, there's one. Right at the end over there. So your name, which organization you're with, and then your question.
I want to find out from what would be the implications of expanded continuous spending over expenditure on the IMF program. And secondly, Prof is asking government to be prudent in spending. How do we walk the tightrope when workers are asking for better conditions of service, demanding salary increases, also at the same time calling on government to cut on expenditure? How do we walk that tightrope? Thank you.
Thank you. 2 questions there from Ghanaian Times. Let's take one more, and then we can answer this batch and come back for more. Right, there we go.
Good morning, my name is Michael Godu. I work with TV3. Doc, it's quite an interesting time for a country where we need revenue, yet we can't tax, impose as much taxes. So how then do we find that balance if we need to raise more money without necessarily increasing our taxes? Thank you.
Okay, I think we have 5 questions there from our 4 speakers. Prof, would you like to take these 5, and then we'll come back for more if we still have time?
The reports were prepared by very able team. So I would, where is the head of economics division? Please pass the microphone on to him to address some. Then what is left, I would.
All right. So if we can have, if we can have Dr. Martha Awo. No. No, actually, head of economics division, Professor Isaac Oseakutu.
Yes.
Prof, if you want to join us up here.
Say a word, say something. Say something and then...
The director wants me to share the work. So, Professor Texin, you want to start? I think the questions are on the fiscal aspect of the report. Thank you.
Let's give a microphone to Professor Turkson.
I have to go up there. I was not aware I was going to answer any question. So I didn't follow, but I'll pick a few that I think are listening to. The last question about how we can get in more revenue without increasing taxes. I mean, Prof. Kote mentioned it. You can raise more revenue if you are very efficient about the collection of the taxes, because it comes with a cost when you collect. So if you are very efficient and you can block the leakages, you can get more tax revenue. You can also expand the net. So these are ways in which we can raise more revenue. But like Professor Kote said, let's forget our revenue side and look more at the expenditure side. So these are, I mean, in line with what the director has said, Ghana needs to rationalize expenditure. And there was a question about how to go about it when workers are asking for. Yes, it's a tight rope. But what is important for government to do is to show that commitment, at least in cutting down the size of government. I mean, it's not just reducing discretionary expenditure by 30%. Right. We still see the V8s all over the place. When the ministers are moving, president is moving, a long convoy of them. They come with cost. So if we could begin to rationalize even the number of government functionaries, ministers, who are on government payroll, that will give a signal to even other public sector institutions to also do something about cutting down the wastage. And one area that I think that we can do much, and I listened to Professor Kote a couple of weeks ago on Joy FM, is the national procurement. It has become a bedrock for corruption. Public sector institutions are paying for products that they can get at less than 30% of the values they actually paid for through the procurement. And that is one area that we need to look at, because if a product is 30 cedis and Ghana is paying 100 cedis, we will not see it in our GDP. So we are spending, but our economy is not growing, because that excess which is gone into corrupt pockets will not find itself even invested in this Ghanaian economy, but out of the economy into other economies to invest in real estate. So we need to look at our national procurement law. We need to find out if you are being very efficient at applying that law, so that at least government spending can be reduced through even the procurement of goods and services. So something can be done about it. And of course, if public sector workers see sacrifice from the very top, I think that the agitations for wage increases will be toned down. But when they see corruption, when they see huge amount of spending going on at the highest level, then they also want to take their part of the national cake. So when we cut down expenditure at the highest level, it sends a signal, and then it will maybe work out. But hopefully, countries have tried it before, and it's worked. The politicians will tell you it's better said than done, but they can do something about it, definitely. And then there was one more on, I didn't follow the question. If you can remind me about
There was another question from the Ghanaian Times about the implication of our uncontrolled expenditure on the IMF program.
Yes, the program is coming up with timelines that we need to meet. I mean, as we speak, we are trying to be successful with the external debt restructuring. If we are not, we will not be able to get the next tranche of the support. So the good thing with this is that, I mean, and as with other IMF programs that we've gone through, is that it keeps the government in check to make sure that it does the right thing. For instance, this year, the central bank is not going to finance even a peso of government spending, zero financing. And like Professor Kote concluded, this is the time that the government has to make sure that the gap that we have of over 5 billion, it does something about it, because we are not going, the central bank is not going to fund it. And then secondly, if we are going to fund it even from domestic sources, then we need to ask ourselves, are we going to be able to raise that amount of money from domestic sources? Is the average Ghanaian willing? If some have already bought the Euro bonds and so on and so forth, and they are going to get haircuts, you think that they are going to go on to borrow to government? So we need to find ways in which we can close that gap. And that will mean that in 2024, the government has to make a bold decision not to overspend because of the political business cycles. And I think that the IMF should be very strict in ensuring that government doesn't overrun its budget to win the elections. And I think that we also as Ghanaians need to play our part in all of this, that it is not a freebie that will better your life. If we begin to punish our politicians when they come and dole freebies on us, but we don't vote for them, they'll stop. They get away with it because they are successful at doing that. So we have our part to play. We cannot always blame the politicians for the situation we find ourselves. Some hold them to ransom and say, if you don't come and do our rules for us, no elections, no votes. They borrow money to do the rules for you. We have a huge debt. Our debt service is going up. Our country is struggling. So we are part of it. We are part to blame. So I guess these are a few words that I could say for the questions that came up. Thank you, boss.
Thank you. Thank you very much, Professor Turkson. We still have a couple of outstanding questions. So, Prof. Quartey, would you like to handle those?
Yeah, I want to add on quickly to what Ebo said. There was a question about debt jubilee. Kofi, I think he asked that question. And that there is a need to restructure because restructure the global architecture. Because you can borrow, Germany can borrow at 1%, Ghana will have to borrow between 8 to 10%. And that is rational. If I should buy Eurobond, Germany should float Eurobond, and I buy Eurobond from Germany, there's no way I will suffer a haircut. I mean, it's just unlikely. But in Africa, if you lend, the chances are that you might lose everything or lose a part of it. So if you're an investor, you have money, and you want to invest in a risky environment, certainly you ask for a higher interest rate. So I think that Jubilee thing, and it's, I don't know where we are taking that to, but we ought to restructure economies, make us less risky, and by so doing, our interest rates will be reasonable. Then my last point is the IMF. Yes, Dr. Professor Turkson is right. The IMF keeps us in check, government finances and all that. But I can also see that in 2016, we were an IMF program, and after the elections, our deficit was way above 10%. So let's not be too comfortable with the IMF. When it comes to elections, it's like nothing else works. We have to face that until we make conscious effort to break that chain, that political business cycle. IMF will not save us. Thank you.
I don't know if perhaps Winston's question from Metro TV has been addressed by that last point. Winston was interested in why government seems to be working towards IMF targets rather than focusing on our own growth factors and determining which ones to prioritize.
I think I agree with him. I also quite surprised when I saw that we have revised our growth numbers downwards. Honestly, but I saw that it was because IMF revised, so government also revised. Now the IMF came and admitted they made an error, and they are revising it upwards. So, you see, that is why you have to take charge of your destiny. Okay? Know what you can do. Yes, they have given the projection, but inwardly or internally, do what you can do to turn the tides around. But rather than just being swayed by the wind, I don't think that's the way to go. Thank you.
Thank you, Prof. We have time for a few more questions, so put your hand up and the microphone will come to you. There's a lady right here in the front row. Your name, where you're from, and then your question.
Thank you, Gojo. My name is Jifa. I'm from ISSER here. Recently, a report was released on private wealth and the disparity and the alarming rate of how much 110 individuals alone have in Ghana. So the report says that $56 billion is what private individuals, a few private individuals have in this country. And the report says that where the wealthiest individuals perceive Ghana as well developed, others such as cocoa farmers, and maybe perhaps UTAG, because I'm UTAG, struggle to make ends meet despite the overall growth of wealth. So my question is, how did we get here? And what mechanisms can we use to do redistribution in a way that is fair and equitable? Because it looks, when you look at the concentration of wealth, sometimes, or most of the time, some of this money is also going to funding of conflict and other illegal activities. And for me, it's worrying that for a short time we are here. So I want to know how we can get some of this. Where is the money anyway in the economy? Where are we broke? Why we are struggling to get 500 million, 3 billion from the IMF. We went to China, we're looking for money to build Eastern Corridor with 3 billion. When people have $56 billion in this economy. I know Prof. Kotti will answer this question for me. Thank you.
All right, let's see your hand. Okay, there's a gentleman in the blue shirt, and then we'll come back to the Ghanaian Times reporter. But here, yeah, the gentleman in the blue shirt, please.
Thank you very much. Charles Ochil from Department of Agriculture, Economics and Agribusiness. So I was also expecting that the outlook, particularly looking at the third quarter, or maybe as we go into the last quarter, we have another conflict at hand, the Hamas-Israel conflict. Probably, if you can make some statement on it, on its implications on our economy going forward. Then the last point I want to also raise is in relation to one key issue that Prof. Kotte highlighted on the data, where in some cases there was some struggle in getting reliable data or current data. So my question is, what is causing the non-release, or in some case, if I put it, hiding of this data for you to make the informed decisions? Thank you.
The gentleman from the Ghanaian Times at the end. Please put your hand up if you're interested in asking a question so we can take note and bring the microphone to you after.
Okay, so we are here to review the state of the Ghanaian economy. So in maybe a word or a sentence, how would ISSER describe our economy for last year and the third quarter? Is it good, bad? How would you describe it?
You want one word? All right, please show by hand. Yep, there's a gentleman in the shirt in the back. Yeah.
Good morning. My name is Joshua from the BNFT. So I think the report was a bit silent on private sector credit, which I did a story which we looked at the trend from 2019 till now, and it's almost at its lowest, at minus 21%. That's in terms of real credit to the private sector. And given where we are now as a country, that we do not have much attention given to manufacturing, credit is not going much to manufacturing, what's the way out from the dip of 21% growth? How do we recover from such a dip? So if you could first some alternatives in terms of how do we recover from such a position?
We can take one more and then we'll get some answers. one
Good
more
morning.
question.
Good
your
morning.
name. Your
Thank
name.
you for the opportunity. My name is Francis Into. I write for the Ghana News Agency. Prof, from all indications, Ghana is likely to have a better GDP by the end of the year. The interesting thing for the KIA, the woman who struggles to go fetch water for someone before she gets a living, it's not to see the macroeconomy grow, but to see that reflect in their daily lives. You put this question to the government and they find it difficult to answer. They assume that they would want this to reflect in the pockets or in the lives of the ordinary Ghanaian. From your projections, you'll be able to tell us that Ghana is likely to grow about 3% by end of the year. How soon is it likely for the ordinary Ghanaian who used to buy kenke for 1 cedi, by now buying it for 5 cedi, also expected to see these macroeconomic figures translating their lives?
Thank you. There was a hand up. So we'll take that last question.
Okay, thank you very much. I am Kenneth Ofori-Boateng from Gimpa. You see, I last week had the opportunity to talk to the incoming budget at the Ministry of Finance. And what I told them is what I want to say here again. That to every budget is expenditure and revenue part. We all know that we are not raising enough revenue in this country. The taxing system is not the best, because what I'm seeing is that we are overburdening the few people paying tax. If I tell you the tax I pay in a month, it's not a joke. Meanwhile, that is even for the direct one. What about the indirect ones? You see people in this country selling cows. And I remember a person I spoke recently to has sold 8 cows within 2 weeks. When I asked him how much he paid as a tax, he said, what is tax? You see, all of us here, those building, you are very much aware of the labor, what do you call it? The labor cost. Now it's 200. Now he takes it, puts it in his pocket and it's gone. He doesn't pay any tax. So I think as Ghanaians, we should begin to think about how we can all avail ourselves for. And the revenue people are, to me, they are very lazy. They have to find innovative ways of bringing or widening the tax net instead of deepening it. I have suggested one area, that property tax. Every government comes, makes noise, they will never look at that side. Brazil built their country because of property tax. Why can't we force everyone to pay property tax? If you don't pay, you sleep outside. We can make it mandatory to the extent that without paying property tax, you will never be able to partake in anything we do in this country. And that is how we should go. I know there are a lot of monies hanging there, low-hanging fruits, but we are not ready to pick them. For me, that is what I think. Thank you very much.
Thank you very much. Prof. Unsempa.
Very tough questions. But we have Professor Fosu in our midst. Prof, are you willing to say something before I add my... And you can respond to any of the... Then I can...
Prof, so if you want to join us up here so that you can use this microphone, please, if you'd like to join us. Thank you. A round of applause for Professor Fosu.
Thank you very much. Let me just say that I very much agree with the director. The problem is expenditure. We can talk about all the revenues, but we can spend all the revenues. So we ought to concentrate on how we can reduce expenditures. I remember, as a member of the Fiscal Council, we met with the Ministry of Finance one time, and I suggested that there should be a bold executive decision to reduce those up there, the salaries, compensation by 10%. By 10%. If nothing else, it will set the order for others to follow. And I'll shout it down. Oh no, that's a political decision. We cannot do anything about that. But it's a political environment that's responsible for these huge expenditures. And so in the final analysis, it is going to have to be a bold political decision taken by the executive. Without that, we're going nowhere. We can talk about Jubilee and all that kind of stuff. That's nonsense. I mean, in the sense that we have had quite a bit of debt relief. If you look at the evidence, quite clear. Huge relief of debt. And then what happens? We go back into debt. How much longer can we operate in the same type of environment? We cannot do that. So once again, the problem is expenditure, 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 and it's a political decision. It has to be a bold one if you're going to do anything about our situation. Thank you very much.
Thank you. Yeah, so the first one is on private wealth. If I ask for the poor, they will always be with us. Inequality will persist. In the US, they will tell you that they are very rich people. In UK, they are very rich people. So as for private wealth, let people create wealth, let them enjoy their wealth. Where the problem is where those in the public sector who amass wealth to their advantage. That is where the issue, that's where we have to address those kinds of inequality. So, yes, there are ways by which we can address this inequality. Through taxation, we can address inequality, and many other ways by which we can help the poor. In the UK, there are benefit systems to support the poor. They give them housing, they give them, in Europe, other places, the same. I mean, inequality is always there. What we have to stop is to stop the leakages, to stop the corruption that a few people amass so much wealth. I think that should be the way to address some of these challenges. But for private wealth, if people genuinely earn wealth and pay taxes, so be it. They should be encouraged. Hamas and Israel and its implications, I mean, we live in a global community, so anything that happens is likely to affect us. I heard recently about fertilizers. That's quite a good proportion of fertilizers come from Israel. So if they are fighting, it may affect how much we're able to get. And they are investors. You know, there are Israeli investors here. So anything that happens within the global economy, if it escalates, and those two countries escalate their war, and it's certainly going to affect our economy. So we ought to be careful and also not wave into some of these wars, or ourselves not engage in any kind of war, because war doesn't help any economy. The point about data availability, it's always been a challenge. That is why, in fact, we wish we could come out our report even earlier, but data remains a problem. Bank of Ghana does so well. I mean, on their website, you get up-to-date monetary figures, financial data. But when it comes to the fiscal data, that is where the challenge is. Because we are not automated, so I can understand. But now, with GIFMIS, that we, you know, go and look at the budget statement from Mr. Tekpe's time. I've been hearing about this GIFMIS system. Every year you hear about it. Yet, getting real-time data to feed into policy discourse remains a problem. Statistical Service is also doing so well. You go there, you find up-to-date data. You know, it makes work easier. It makes us to all appreciate the challenges, and then we can address them. But when you don't have data, it becomes a big problem. And I don't know how you can meaningfully draw a good policy if your data is not consistent or up-to-date. You should describe the economy in one word. The economy is picking up gradually. So it's picking up. Private sector credit. If you recall, I showed some data that it has picked up. In fact, it grew by 30%, over 30% over a decade. It's the highest over a decade. And why? Because the banks have learned their lessons. Now they are not buying, they are not doing lazy banking, where they buy treasury bills and government bonds and all that. Now they've realized that it's not as safe as we all assumed. So they are now channeling their funds into the real sector, lending to the private sector. The only subsector where they are a bit reluctant to lend to is construction. Contractors are, in fact, if you look at the non-performing loans, they form the majority, the greater part. It used to be agric. Now construction has become a major area where domestic money banks are trying to avoid. But with services, they are lending more to services, retail, wholesale, etc. So private sector credit has gone up by over 30%. Lastly, yeah, and then to manufacturing. What can we do? With what is happening, I believe they are now channeling more resources into manufacturing, except that the interest rate is still high. But if inflation comes down, inflation gets to some appreciable level, and also exchange rate remains relatively stable. Cost of doing business remains stable, low default rate. Yes, let's also learn to pay when we borrow. Sometimes when you look at very big people in authority, and they have non-performing loans, you tend to wonder. Because we have poor address systems, because we don't use our credit reference agencies, a lot of people borrow, they don't pay, and the few who borrow and have to pay, we have to pay the higher interest rate to cover the cost. Implications for the poor, better GDP and implications for the poor. It is only when you grow the cake that we can share. If you don't grow, you can't share. So growth is important. But how soon? Unfortunately, 3% growth rate is not appreciable because our population growth rate is about 2.8%. Okay, if your population is growing about 2.8% and your GDP is growing at 3%, in net terms, you are not adding much, and therefore you cannot improve livelihood significantly. So let's grow at much, much higher rates. Then the poor, the KIAs and all the people you mentioned can feel it in their pocket. But at this current pace, it will be difficult for them to feel it in their pocket. Lastly, the issue about broadening the tax base. Because yes, we are burdening the same people. I pick my pay slip and already the pay is not anything to write home about. But you look at the proportion of taxes that you pay, it can be quite depressing. We are overtaxing the same people instead of broadening the tax base. You've mentioned the artisans and all, they work. So find a way of taxing them. But we are very lazy in broadening the tax base. Is the same people. We've tried property rate. It looks like we've advanced in property rate collection. I am told that we have to change the law. That is why it's taking so long. The property, to value property, the law allows that it's only the building, but not the land. So it's not helping with determining appropriate property rates. That has been done. The law has been revised now. So now they are doing the proper valuing. It's now being automated. They can link it to your, they take your, your mobile number, your phone number. You can log on and see your property, the location, the rate. Except that recently when mine was done, I had a land that had only one building, but on it I see two. So I have two rates to pay. So I challenged the guy to go and correct that before I pay. I paid part and I said, until you correct this, I'm not paying. Every week I get a letter, a reminder with threatening words. In 10 days, if you don't pay, we're going to take you to court and we'll publish your name in the dailies. So yesterday I called the supervisor. I said, what is the meaning of this? This is the problem. Address the problem and I will pay. Instead of sending me threatening words, so these are standard words that we say. So you see, we are making progress, but there's room for improvement. Thank you very much.
Thank you so much, Professor Peter Quartey. All right, so I think at this point, we can officially launch the report. But I'm told it's not a layman's job. It requires some experience. So I want to call my ably qualified colleague, Communications Officer of ISSER, Vincentia Quartey.
Thank you, Kojo. So the launch will involve our honorable guest on the podium stepping down with me and helping me unveil the publications. And as we know, a lot of work goes into this publication, so we need your support in appreciating the team that has worked so hard on this to give us the 32nd edition of the State of the Ghanaian Economy Report. My colleagues, please help me push this. Araba. And sometimes we want to celebrate all the hard work and dedication that goes into this with a bit of fanfare. So please be prepared. We don't want to take anybody by surprise. I take the opportunity to acknowledge the presence of Professor Daniel Ofori, Provost of the College of Humanities. Thank you, sir. Please. Okay, so yes. All of you, please, you on time, please. Check, yes. Calvin. So they are joined by the heads of division to do the final unveiling. Photographers, please capture the moment for us. 1, 2, 3. Thank you. SGER 2022 is launched. Please let's appreciate the authors. Let's appreciate the economics division. Thank you. Thank you.
Wow, that was That was something. A round of applause once more. Please, if you can resume your seats. I am not going to forget that in a very long time. That was quite special. And, you know, these days that the economy is hard. ISSER has money, special effects and everything. Wow. Now, please, I would like to acknowledge those of you who are participating online. There are people from around the world who have joined us for this all-important event. And I want to take a moment to remind you of how you can also participate online. So we are at ISSER UG on Facebook, Instagram, and on X, which used to be Twitter. We're also on LinkedIn. There you go. So you can follow this event live on all of those platforms. And it's worth mentioning, of course, this event is sponsored proudly by ADB and Stanbic Bank. A round of applause for our sponsors. All right. Now, you heard mention of a very special guest, and I think we should take advantage of his presence to hear a few very special words. So let's welcome him with a round of applause. He is the Provost of the College of Humanities, Professor Daniel Ofori.
Good morning. It seems only a few short months ago that we were here to perform one such event. It tells us how quickly the numbers roll around, and all too soon we are here to interrogate the performance of our economy. According to Professor Kwoti, in one word, it's getting better gradually. Now, if the economists are using 5 words to substitute for one word, what can I say? I can only say that we are quite well aware that ISSER is doing something very fantastic, and that we hope that our voices and the issues that we have captured in that report will not stay there, because if they do, the next year when we come, the questions will be even more difficult. Questions like, how soon are we going to see the CAE benefit? And we have said that we need to move from a net of 0.2 to maybe 20%, which means that we are going to have to grow like an Asian tiger or a Southeast Asian tiger, and then also reduce our population rate. But that one, I don't want to go there, because they may say things. Okay, so what is left for me to say is to congratulate the ISSER team and to thank everybody who has worked so hard to produce such a fantastic report, and to hope that, did you say you were going to sell it, or what do you want to do?
In fact, while you are here, maybe you'd like to bid on the first.
No, the college has already paid in advance. We have paid in advance by helping to launch it, to bring it here. So anyway, I think that it got some very important and valuable information. I hope that we are going to make use of it. Not only this one, but what we are going to produce in subsequent years. Thank you very much.
Thank you so much, Prof. We really appreciate that. Okay, I think what this means is that we can now hear from our chairman with his final remarks before we wrap things up beautifully this afternoon. So it gives me great pleasure to invite once more the chairman for today's occasion, Dr. James Asarieje.
Thank you, Kojo. And let me also add my congratulations to Professor Korte and your team. In fact, this is what I call the true overview of the economy. And, Prof, you see, when I listen to you, in most cases, nowadays they don't call us, those people, especially those factory people, they don't call us to comment. I remember I used to really, speak to the media a lot. But you see, when I listen to you, you speak so much for industry and private sector than ourselves. I think one time I met you and I said, maybe once you speak and advocate for private sector growth, you have to bring us invoice so that we can pay. But I think it's good. It's really gratifying to know that you really are able to present the situation as it is. As I started by saying, if you have independent institution like ISSER, and then you also added that, non-partisan, which is good, to really from time to time, and you've been very consistent, 32 years, that is really a long time, to present, give us an overview of the economy. What I would recommend is that ISSER and other think tanks, also in the country, in addition to presenting or making us know the situation, if you can also add monitoring or trying to track national budget policies of government, now it's going to help us to probably reduce the mistakes that managers of the economy make. So once, in a week or two, we'll be having the 2024 budget presented. But then as the budgets are presented year on year, nobody holds government to account as to staying within targets or making sure that whatever they've promised, they will be able to deliver on those promises. So I think institutions like yours and also other well-placed institutions, and of course, I think the media has also been doing very well, but we need to do more so that we don't just allow, leaders of the economy, politicians, even sometimes business leaders to just speak and then get away with it. So that would be my recommendation. Then we go at it so that will be more, we'll look into the future with the things that we think we should do to make sure the economy would really, really come back to life. Now, I think a lot of the questioners have really highlighted the need for growth in industry and manufacturing. If at the moment, as we saw from the figures, we're doing under 1% growth compared to service, probably over 5%, then there's a problem. Because even within the sub-region, we have countries that have policy rates in single digits. So the question is, why is ours different? Why are we doing about 30%? And if you borrow at 30%, even now if the banks decide and agree that they will give you loan, what business are you going to do so that you'll be able to make profit to take 40% out of that to go and service your loan? So that is where we are. But if industry is not growing, if manufacturing is not doing well, definitely the needed jobs will not be there for our teeming youth. So we need to find a way of making sure that the country will focus on growth poles that will actually translate into the jobs, good revenue for the economy. I would also want to say that in some cases, one would want to ask how, like some people have asked, how did we get here? We all have a role to play. And I think it started as we have seen. So let us ask ourselves individually, what are we going to do, or what do we need to do? There's a slogan, if you see something, say something. And I always say that the politicians, the managers of the economy, they are people that were our mates in school. There are people that we attend churches with. Some are our friends. Why is it that when they get to power, then more or less we don't seem to really help or be able to bring them or go closer to them? We're talking about political business cycle. These are the same people that we've been with, we are with. So what we need to do is that we all should be part of the management of the economy in our own small way, so that the next time round, the stories will be just singing our praises. And I believe that we all collectively can make the story better. I think I wouldn't say so much because, Prof, you've done all the job and the other contributors. Let me thank you once again, especially those of you who are here. And let me say that at any point in time, as industry and private sector operators, we want to be part and parcel of the entire exercise. So please, next time around, bring us in. I know you've been doing that, but bring us in so that we can contribute our quota. Thank you very much, and I believe that we've done a good job. Right, thank you.
Oh, please, let's make it a bit louder for our chairman, who has indeed superintended proceedings beautifully today. Thank you so much. I wanted to very quickly acknowledge a very special guest who is with us in the audience, but let's acknowledge him with a round of applause. He's the Provost of the College of Education, Professor Ni-Ade Kujo. Thank you so much for coming, Prof. It's a pleasure to have you. So I keep talking about how this document is important for planning, which makes you hope and pray that those who are planning for our economy will also be interested in this document. Let's see if maybe they can put me to shame. Can we see the rep from the Finance Ministry? Is there anyone from the Finance Ministry here? No? Okay. Okay. All right. Well, the document is available, so I'm sure they can access it later if indeed they intend to. All right. I'd like to call on Vincentia again to help us with a vote of thanks. Let's welcome her.
Thanks, Kojo. Ladies and gentlemen, distinguished guests, esteemed colleagues, as we conclude the day's activities, I'd like to extend our gratitude to each one of you who made it here today to witness the launch of the State of the Ghanaian Economy Report 2022. We appreciate your presence. Our sincere appreciation goes to Dr. James Ajay for graciously accepting the role of chairman for this event. Your presence and leadership have been valuable in ensuring the success of this occasion, and we are grateful for your presence. Thank you. Special thanks goes to our provost, Professor Daniel Ofori, and Professor Samuel Ni-Ade Kujo for taking time off your busy schedules to be here with us. Special thanks goes to Professor Robert Osei-Daku, the Dean of the School of Research and Graduate Studies of the University of Ghana. Thank you, Prof. Thank you for being here. Special thanks goes to our Director, Professor Peter Quote, Professor Isaac Osei-Akoto, Head of the Economics Division, and the team of authors who have poured their time, knowledge, and expertise into the creation of SGER 2022. Your hard work is the cornerstone of this publication, and we are very, very grateful to you all. Please let's give them a hand of applause again. Thank you. I'd like to thank Mr. Kojo Yangsin for moderating this event and ensuring the discussions flowed smoothly. Your role in facilitating today's proceedings is greatly appreciated. Thank you, Koju. Big thanks goes to ISSER faculty and staff who have worked tirelessly behind the scenes to make this event possible. Your dedication and commitment to ISSER's mission to promote knowledge for development in and beyond Ghana is evident in every aspect of today's launch. Colleagues, thank you so much. Please let's give ISSER staff, faculty a hand of applause. Thank you. We are also very appreciative of all stakeholders here present today, representatives from academia, industry, government, and development agencies. We are deeply appreciative of your presence and support today, and we look forward to your continued engagement. Thank you once again, and we hope the insights and discussions from this event will contribute to the betterment of our great nation, Ghana. A few announcements before we exit. We will take group photos outside at my left-hand side on the stairs. Media interviews will take place right here in front of the podium. Refreshments have been served at the registration area. We encourage everyone to pass there and grab something, and also take the opportunity to network. Thank you all, and see you next time.